I want to do a video on sector momentum. As you guys know, I mean, we hit some huge home runs in PEIX and BIOF, where we got nearly 100% gainers off BIOF and a huge one off PEIX too. So how we played this thing is, well, PEIX, right, we had this huge breakout out of its base. And you can see what happened, right? The stock ran to 80 cents. And then as breakouts happen, they tend to test the breakout spot. And so when this stock pulled back, it started bouncing around here and essentially was making a flag above the breakout spot, right? And as we know, a stock that thrusts up 100% and goes sideways for a week or so will tend to break again in the direction of the flag. And so what we did was we bought right here on the break of this flag, and we loaded up in the chat room at 75 cents. And you can see right away what happened. It closed, it ran almost to $1, closed at 87 cents. And so because the close was so good, even though we're up 15%, we ended up holding overnight because of the volume and the way the pattern plays out. And so then you can see the next day, right, this stock runs all the way to almost 110, and this is where we start selling out. I sold all my shares between 101 and 108. But from 75 cents, that's a pretty good gain. And so now that we've played this, what we want to do is find, because obviously this must be a hot sector, so what we want to do is find a sympathy play. And so BIOF is a stock that you can see is in the same sector as PEIX, but it hasn't gone yet. It did have its initial thrust like PEIX did, and then it's just been flagging here, but its flag has not broken. And because they're in the same sector and they're in the very similar price points, what we can assume is that at some point this is also going to break out of its flag. And because PEIX had now in 2 days gone from 75 cents to, you know, in the ones, we know, and BIOF has not even moved, we can assume that this is going to break out of its flag. And so when we get confirmation, technically, that's when we load up. So we did a couple things here, and this is what made the trade huge. Number one, we made an anticipatory trade because PEIX was going, and we bought shares of BIOF in the 57 range. And we held on to it. And then our plan was, hey, if we can break out of this flag, what we will do is double up. And so the next day, when this stock hit 61 cents, we actually doubled up on our shares. And you can see this stock really made a strong move here. And, as we always like to do, now that we got 2 positions, we got to start scaling out. So we start scaling out on the up thrust. And then, we always put a stop at our buy price and let the rest ride. And so then you can see the next day, it up thrust again all the way to 120. Now, this is a 100% gain from our buy spot now. And so this is when we start selling. And so I end up selling all the rest of my shares, between 90 and 110, just scaling out a little by little. And so this is an example of how we could take a chart from a great chart in a hot sector and then apply it to another stock and get the same type of returns once again. And so I love doing that. When I have a hot oil stock and I play a great breakout, not only do I play that, but then I start looking for laggards, or what we call sympathy plays, and I start playing stocks with similar features, and they will tend to run the same way. I hope that helps, guys, and talk to you soon.